What's up, everybody? Welcome to the life cycle of a trade, the series where we break down the thought process behind trade entry, trade adjustments, and closing order. In this video, we are going to cover a call diagonal. All right, getting a couple positions on today. We've got E-mini S&P 500 futures up 32 points, the NASDAQ up 230, the Dow up 28, and the Russell up 14. So everything moving to the upside here after the CPI print, the NASDAQ being the strongest of the group. But one stock that really hasn't participated in the upside bid in the last couple weeks is Nvidia. Nvidia trading at 136 right now. It's up $1 today, but has been pretty weak over the last week or so. We've gone from 145-ish down to 135-ish over that period of time. You had earnings come out. We did that iron condor, and the stock stayed it went basically nowhere on that trade. I think right now with volatility this low at 16%, 16 IV rank, monthly implied volatility at a 44 handle, I think it's an interesting trade for a long premium position because of how low volatility is currently. You also have AVGO earnings that come after the close tomorrow. So you've got AVGO up $8 and change today. Some news out on Apple renewing a chip agreement or agreement to make chips for their products. But Nvidia, I think it's a long play here. So I'm going to look at a call diagonal spread in Nvidia. I want to play the upside. I want to do this in a cheap way to get some long delta exposure for a small amount of capital. So for call diagonal, I usually like to go to around a 40 delta for the long option, somewhere in the 50 to 70 day time frame. That would look to be this February monthly expiration. So I'm going to go to the 145 strike just to get a sort of round number here. You could certainly go to the 146. In January, which will be my short option expiration, I'm going to look to sell about a 20-ish delta. So here, I'm going to look at about, let's call it the 155 strike here. It's a 19 delta here. So this will net me about 23 long deltas. Just for comparison, if you were to buy 23 shares of stock, it would cost you somewhere, if you're cash secured on your account, somewhere between $2,500 and $3,000 just to buy those shares of stock. So you're doing you're getting that delta exposure much more capital efficiently than you would just buying shares. So my debit is going to be $5.76 here is what we're marked at the mid price. We'll see if we get filled here. No fill. You got volatility very low across the board in the market, so it's going to be tough to get filled on any sort of positions here. All right, so we're in. We got filled on that for a $5.79 debit. We've got 23 long deltas playing the upside in Nvidia. Maybe we get a little bit of a bounce into the AVGO earnings that come after the close tomorrow, but stick around. All right, we've got a position to take care of today. One of our bigger wins in this portfolio. E-minis are up 19 right now. You had Nvidia at the CES event yesterday. It's had a nice move higher. We're sitting around 150. It was actually higher this morning and was more profitable this morning. But we had a call diagonal spread where we put this call diagonal spread on when the stock was trading at about 137. You could see right here was kind of this range of where the stock was trading. We did this on the 11th. So roughly in this range here was when we placed this trade. Stock did go lower, but has had a nice bounce back. And so when we put this trade on, it was a pretty long duration call diagonal. We did a 72-day for a long option, almost like a poor man's covered call type setup. We sold the 37-day against it, and we did that for a net debit of $5.79. You can see this is a 10-point wide call diagonal spread. So that is intrinsically the max it can trade for. There's always going to be extrinsic value left in that position. So you actually have more than that available to you if you get that big move higher. Now, we had a move to about the 150 handle right now. This is about as good as it gets for this position. You get the value of this option, the long option, increases in value. And we could see this on the when we look at the chart of the option. So we bought this option at $7 and change. It's gone all the way up to $12. That's been a great move. Now everybody gets worried about the call that you're selling capping your profits or, hindering you in any way. So let's look at what that 155 strike has done. So this strike, when we zoom in a little bit, we sold this at $1.88. It's now marked at $2.60. So it has increased by 80 cents versus our long call that is increased by $6 on the way up. So we've given up that 88 cents to hedge us a little bit in that throughout the duration of that trade. You can see we sold this at $1.88. It got down to 50 cents. I could have scalped out of that or done something else, but it hedged me about $1.30 into the down move that we had in Nvidia. So when we look at that same time frame, this option went from $7 and change, which is what I sold it for, down to $6 or $5 maybe at the low point. So we lost $2 on that option. Our short option hedged us half of that, maybe about $1.30 in the short premium that decayed on the way down. So instead of losing $2 or $3 on just the naked long call, if we did a naked long call instead of a call diagonal spread, instead of losing $2 or $3 on the way down, we only lost $1.50. It allows you to hold that position a little bit longer because you have that decaying option, that short premium that decays in your favor throughout the duration of the trade. So this was the perfect trade for us. I mean, it ended up working very, very well. When we look at Nvidia, getting back to just the normal stock chart, obviously a play up to 155 would have been the home run or grand slam. I would consider this trade a home run here, almost 100% return on capital. Call it 90% return on capital here once we're all said and done. So we're going to close this trade out here. Worked out perfectly. It was exactly what we needed. No point in sitting in this and not taking profits here. So let's route this at 95. See the mid price moving around. We'll try this at 9.95. We'll see if we get filled here. Yep, there we go. 9.95 is our fill. Closing this trade out for a $416 profit. A really nice trade for us here. See volatility has increased into that. IV rank, of course, as well. And then the underlying price, that move was perfect for us. So nice trade for us. Big win in Nvidia.